Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I want to speak about USDCAD because we do have quite interesting price action and structure. Starting here from the monthly time frame, in fact, we can see how we have a market which is currently testing the very strong supply and resistance that was created when the market printed this green candle here. In fact, what we can see and what this green candle indicates is that even though we were seeing very strong bearish momentum developing, when the market tested this area, it immediately got rejected to the upside, indicating that buyers were interested at this level. And since the market has now broken below the zone, the previous support given at this level is now turned resistance, because as you know, in the market, previous support, once it gets broken to the downside, it becomes resistance. So in a situation like this, from a monthly perspective, we do find strong resistance at that zone, from which we do expect multiple rejections. And that is in fact exactly what the market has been providing all along in these multiple tests that the market has created at this level. Dropping down on the weekly time frame, what do we see? Now, here in the weekly, we can see how we might be getting ready for another test of that zone. In fact, we can see how from a pattern perspective, we have a strong impulse followed by a correction. Now, in general, after you have an impulse and correction, what you expect is the continuation to the upside. In fact, that is how an uptrend is created. An uptrend is created by a series of impulses and corrections, which creates the uptrend, so a series of higher highs and higher lows. So in a situation like this, the market should at least try to create another move to the upside to test once again that resistance and then potentially to reject it to the downside. We can also notice that if we take our Fibonacci from the low to the high of this impulse, we are currently sitting in the zone which is in between the 50% and 0.32 of the Fibonacci taken on this weekly impulse, from which a rejection to the upside also here definitely seems a possibility, at least in the short term, before then finding once again resistance on the monthly as we have previously seen. Now, if we go and see what we have on the daily time frame, we can see how from a daily perspective, the market has just printed a very interesting pattern, which is this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would like to see is the market create a rejection to the upside to go and complete the pattern itself at the previous support turn resistance. So here in the daily, what we would like to see is a potential rejection to the upside for the completion of the pattern at this previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the CAD, we can see a massive decrease in the strength of the CAD with the last report. In fact, we went from having 23.2k net positions down to having 4.1k net positions. This indicates how 4.8k shorts were added with the last report from an institutional perspective, and 14.2k longs got closed. So overall, longs got decreased from 56 to 42k and shorts got increased from 33 to 38k. Now keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, what you are actually checking is CAD USD. But since we're interested in USD CAD, we have to reverse everything that we're looking at here, meaning that actually the weakness of the CAD indicates strength of USD CAD, because if the CAD gets weaker, USD CAD creates the rejection to the upside. So the technical side of the market that we have just analyzed is showing the same thing that the COT side is indicating, so the institutional positioning. So how we could be approaching this potential move to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential rejection to the upside for the market to complete this overextended M pattern at the previous support turned resistance. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.